Good morning. This is the video newsletter for Buy Sell Short for Sunday, December 4th. Nice action on Friday. Actually, this past week, as you can see, we're looking at the 15-minute chart. A week ago, it was the end of the world. Coming into the weekend, the market was going to implode. The bears and the shorts were all happy and gleeful. And here we are a week later, and that 2-week sell-off all but wiped out on one of the biggest rallies we've seen over the last 3 years. Thanks in part to the Fed essentially coordinating with the other central banks and putting some confidence and liquidity back into the market. Now, if this action is to tell you anything, it is this, in my opinion. This market right now is a caged, massive bull ready to be let free and just trample all over the bears. The only thing holding it back is this nonsense in Europe. And perhaps this upcoming week we could see an end to that. We have a huge meeting on Thursday and Friday where the Europeans are going to decide essentially the future of Europe, at least till the next crisis rears its head. So what we could be looking at this week is a lot of negative and a lot of positive articles and reports coming out of Europe that will spike and drop the market. Essentially, just like we saw in the month of September and October, we're probably going to see that again. We might see some enthusiasm into that beginning of that 2-day meeting on Thursday. So, we're going to be held victim to the reports that come out, and that's going to give trading opportunities. Economic data continues to come in better than expected. The U.S. economy is slowly starting to move higher. Now, I know there's going to be a lot of chatter there that the 120,000 jobs created is nothing. But, the jobs rate, unemployment rate did drop, and we continue to create jobs in this market. Consumer confidence has come in better than expected. Retail sales have come in better than expected. We're starting to see a trend here where the headlines are starting to get positive, and all these double-dip recession idiots that, have crawled back under their rocks, they're going to be hating life here really soon, I think. But as for the market, you can see we've gone vertical over the last week. We are a little bit oversold. Where we're going to go from here, again, as I said, we're probably going to be held victim to the news releases and spins that come out of Europe. Resistance is 12,284 on the Dow. Now, we did get a positive MACD cross on Friday, and the last time we saw that, we saw a pretty nice little move. What I'd like to see happen is we've gotten stochastics back over the 80 level. Let's see if we can see similar action to what we saw back in October. In October, when we did get up there, we did a slow little grind higher for about another 600 points or more. Again, as I've said, this market is coiled tightly. So many traders and so many funds are underperforming this market right now. There are only 3 weeks or so left for them to make their year, and you're going to see a lot of stocks go boom, boom really, really soon, especially if the news out of Europe is positive. Now, as I've been saying over the last couple of weeks, we have our year-end strategy in place right now. And what that's going to entail is us carrying more positions than we normally would carry and a lower cash stance. That's just how we trade this market this time of the year. Tax loss selling is still evident in a lot of stocks, but it's really starting to dry up right now, and you'll really start to see it drying up over the next week. Typically over the next week, week and a half is when we look to build our January popper plays, and I'm going to start sending that list out here in a few days. I've already got a very nice list, so I'm going to stick it on the website here soon, send an email out. It's a big list, or it will be a big list. Doesn't mean you have to play all of them. We'll send 8 emails out on some, but there's going to be some self-study in this list as well, sort of akin to what we see in the popper scans that I send out nightly. We're going to have targets, prices, etc. SMH chart, as you can see, 3270 is what we'd be looking for on a breakout, and we are looking at a positive MACD cross here on the SMH. Similar chart setup on the Russell 2K. What I would really be looking for is a break through that 200-day moving average, and that probably happens very, very soon. We see that break through the 200-day moving average, and you're really going to start seeing a lot of these small cap plays go boom. One thing to keep an eye on as well, price of oil has been ticking up. We're about to get a positive MACD cross in oil, and unfortunately we could see a little power spike here this month, especially if we go into a bull mode in the market, just because, you know, it always seems whenever the market and the economy looks ready to turn, the Wall Street crooks jack up the price of oil. So, you know, hopefully we don't see that breakout, but if we do see it, we could see some action in the small energy plays and in alternative energy stocks. But let's jump into some chart plays. CYTR, nice little chart setup here. December 11th, I believe, is when they have that poster presentation at the Leukemia Conference. Breakout is a close over 40 cents. And again, same targets we've had in this one over the last month, except the chart looks really, really nice now. Stochastics in the basement, and I like the setup here. BIOF, solid bounce off the 200-day moving average over the last 2 days. We got a nice gap on this one on Friday. Next target on this one is a move to 87 to 90 cents, and then $1.05 would be targets on this one, with support at the 20-day exponential at 66 cents. PEIX is also on the pop scan going into tomorrow, so there could be some nice momentum taking these ones higher. Our other play on this one is of course BWEN. As you can see, we continue to stair step higher. Pop, retrace, pop, retrace, pop, retrace, and these retraces are getting smaller and smaller. And what this tells me is, you know, looking at this chart, we could see a really big move on this stock over the next 2 days, and targets would be a move to 87 and the 200-day moving average at 108. As you see, you know, volume is lower typically on the down days, and with continued momentum in BIOF and PEIX, as I've said, this chart setup here has ones written all over. It's just a matter of when. Now, one of my favorite very nice risk-reward plays down here is TRID. We continue to coil. A close above that 20-day exponential will set that free. It's 27 cents right now. I would be accumulating this one 23 cents and under and waiting for the move in January. I mean, this could be an easy 50 to 75% mover on the right news. The chart is looking bottomed out here. It just needs an excuse. And these are the kind of setups that do very, very well over the next month. ANX, positive MACD cross. Stochastics are curling up. Again, part of the problem with ANX is it's not a turd. And the turds are doing very well on this market. But this is one I'm trying very hard to sit in. And the simple reason is they've got a bucket load of cash. It's trading under cash. It's a biotech stock that got hammered. You know, the right news, and we could be looking at this stock up 50% in a day with minimal downside risk given the cash stance. I mean, this is almost one just to sit back and wait for it to work out, and it will work out just given their cash stance, in my opinion. EDGR, very high volume over the last week. There is an obvious fund dumper in this stock. Once he is gone, boom, boom, we go. Again, nice big sell-off after its earnings report. We got a positive MACD cross on Friday, 50 cents break, and we get a move up to that 50-day moving average at 62 cents. Stochastics still in the basement. I like the setup on this one. MVIS, another one, a play into the CES show, just like TRID is. That is the first week in January. These stocks tend to do very, very well. Last year, the stock, I believe, ran 50% going into the CES show from mid-December to the first week in January. They're there again this year. The stock tanked on financing, so they now have cash. That was one of my biggest worries on this stock, which is why we've jumped back in here. A break of 50 cents. And our target is the 50-day moving average up there at 64 cents. That's almost a 50% return from here. And, you know, if this one continued to lag down here or even dipped further, I would definitely be looking to accumulate it. I like the chart setup. The indicators are all where I like to see them. Stochastics under 20 and curling up. Positive MACD cross. Stochastics in the basement. These are the kind of plays. These are the kind of setups going into December that I like to play going into January. MCZ, we are about to get a positive MACD cross on this one. Stochastics look good. Last positive MACD cross. We got a very nice little run on this one. You know, the news flow is not as positive this year as it was last year with the loss of the Call of Duty game. But, you know, with the gamer stock starting to do very well, the right press release and the right volume this time of year, and, you know, a move to 75 to 90 cents is not out of the question here. ZHNE. You know, we've been really, really patient with this one, but sometimes the quality stocks you have to be patient with. As I've said, the garbage, turd, bankrupt, high debt stocks are usually the ones that run the biggest first. Break and close over $1, and, you know, there is no reason why this stock cannot trade 50 to 75% higher over the next few weeks. CEO, CFO were buying here, and that has been enough to send some of these turd stocks up, you know, 25, 50% recently. Right sector, nice chart, beaten down. I mean, this stock was trading at 2+ in August and has yet to have a rebound. These are the candidates we look for big moves going into January almost every year. NEI, same thing. All the indicators are deeply oversold. We're about to get a positive MACD cross. We've got stochastics curling up through the 20 level. Stock has been beaten down over the last month. In my opinion, a value play, which is why it continues to lag here. But again, this is a stock that can quickly see a 20 to 30% move over the next month, and really minimal downside here at this juncture, in my opinion. And these are the kind of stocks that we are going to start to see go boom, boom, boom really, really quickly, especially if we start seeing funds and traders get some confidence in this market, put Europe behind us for, you know, a few weeks, and get a monster little move into January on the market. These are the kind of plays that will do very, very well. So we've got some very, very nice setups going into tomorrow. We've got a nice big list of January popper plays. We also have some nice little setups on the pop scan I sent out a couple of hours ago, so definitely check that out. We are still using the backup chat room again, probably going into tomorrow, and we're looking to switch to a new server, so look for that email or check the email for the backup chat room. Any questions, shoot me an email. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.